Okay, folks. So I'm going to kick off with the S&P 500 again. So you can see, look, keeps kind of grinding higher. So again, I think I'll just focus in on that trade, that option trade for now that we put on. I sent out a little video earlier on. I'll just jump into it again. So remember, this is the last leg. There was actually 3 legs to this trade. We had a bear put spread on, which we closed. So we were right to close it the other day. In hindsight, we should have probably closed it a couple of days earlier. We would have made more money out of it. But again, I just want to highlight, and I'm not sure, I want to make sure the message is going home, getting home to you about how you can go about shorting an index or a stock without actually shorting it outright. Shorting something that's on this type of a bull run, just from experience, might necessarily be a good idea. And you can end up managing the trade for quite a long time. Whereas what we did was we essentially bought a bear put spread, which basically is a combination of 2 options where we bought the 660 put and sold the 650 put. And what we wanted was SPY to drop below 650 to make our full profit on that trade. It started to make a bit of a downward spiral there, but it didn't materialize. It kind of bounced back up off this center line. So this was expiring on Friday. So time is starting to tick and we closed out of it. So initially when we put on the trade, we also said we would finance the majority of that bear put spread because there is a cost to it by selling the 620 puts for a later expiry, which is 2 weeks time. And the idea of that was, well, look, our view was that if SPY actually did fall down to this level, we want to buy the index anyway. So it was a trade that covered 2 aspects, really. One, try to profit from some short-term pullback in the market, and then at the same time, position us long if it did fall quite a bit. As it so happened, the market just kind of trundled sideways, really, since we put the trade on. And that trade cost us at the beginning $99. What we did the other day was close off the bear put spread. We took in about $125. So we're in a credit of about $25 on the trade. In other words, we've got paid to put the trade on. But we still have this outstanding leg. And what we need for this outstanding leg now is this to go to 0. We don't want SPY to fall below 620 just for this specific trade. Set aside the idea that we want to actually get assigned. And in that situation, we'll have made $25 in profit. So I just want to benchmark that against actually, let's say we shorted the market here. Right now, we'd be losing on the trade. We'd be down. We'd be managing the trade. Whereas the way we approached it, actually, there was a very low probability of us actually losing anything. So I just really wanted to reinforce the beauty of that strategy that we applied, how to really kind of put on a short-term bearish trade because you have a longer-term bullish bias in the market. And that's how we constructed the trade. So I think there's great learning in that. If you have any comments or questions on that, please shoot. I'd love to know. If not, we'll just keep going. Okay. Just a couple of things while we're talking about the index. So you can see, we know there's a government shutdown in the US at the moment. Markets, as you can see, couldn't care less at this minute in time, at least. Bond yields are kind of stabilizing here at about 4.1%. So our TLT trade that we've done a couple of times, that's gone ex-dividend today. So anyone's still holding TLT, you're going to get paid more money again for holding TLT. But we decided not to re-enter the trade because our view is that there's a chance that bond yields might creep back up again. Having said all of that, the jobs data that came out yesterday, I think it was, it shown an indication of slowing, and that would be conducive to the Fed actually cutting rates again. So we have to keep an eye on that jobs data to see where it's going. It's not terrible or anything like that. It's just weakening. That's all the best we can say about it. And if you looked at the euro dollar here, for example, that's kind of going sideways as well, you know. So there's no, at this moment in time, I think the market is kind of scratching his head. What are the Fed going to do? So we've decided to stay at TLT for now. We wouldn't be interested in that. One trade I do want to talk about now before I get into our short-term trading opportunities is crude oil. Look where it's gone on our chart here. So if I were to just draw support lines here for the last month. So let's go back here. This is since August. It's been pretty much rolling between $65 and down here at $62. Okay, so it's pretty much stayed in this range at the moment. The supplies are building up of crude oil. So if you look at the weekly inventory reports that we get out from the US Energy Agency, for example, on natural gas and crude oil, if you look at crude oil supplies, they're building. So obviously that's bearish for the price, okay? But that's why it's kind of trending sideways here. So it's gone to the back down to our bottom Bollinger Band here. If you wanted to trade this, you could do it in two ways. If you're based in the UK and Ireland, you've got a spread betting account. That's the tax-free way to do it. So you literally bet whatever you're going to do, a euro, a point, a pip for whatever way it goes. If you wanted to trade it through Interactive Brokers, here's how you would go about doing it, okay? Now, I just want to reiterate here, if this support area doesn't hold, there's a great chance we're going to go down here to $58 and possibly even $55. And I'm going to show you what the profit or loss would be per contract on this, okay? So I'm just going to give you a quick education here as to how you would trade this in Interactive Brokers. So we would click on trade, and this time we're going to click on futures, okay? Because we're trading futures, and CL is your ticker symbol, CL. Now it's going to automatically come to the front month contracts. I'd suggest you go out to December, okay? Just to give it an extra month, because these, if you look at here, these contracts switch over on the 17th of October, which is only 2 weeks away. So that means we'd only be, if we traded this contract, we'd be only trading for the next 2 weeks, for example. So we'll give ourselves more time and go to the December contract. Our class is CL, okay? So what it's going to bring up is a chart here, and you can see it's a very similar chart, okay? The prices are going to be slightly different. I just want to identify here. So if you look at here, the price is 61.14. This is 61.52. The difference is this chart with the exclamation mark is the continuous contract. It's not like a November contract, a December contract, or anything like that. It's a continuous contract as such. So that's what. That's why there's a slight price differential on it. Okay, so just be aware of that. So what we would do, let's say we wanted to go in and buy one contract of this. Well, the first thing you need to see here, the multiple here is 1,000 per point. So if we put this trade on, we're ultimately having 61 times 1,000. It's a bet of 61 grand. Now, there is micro versions of this that you can get, which are smaller contracts if you wish, okay? I'm not going to go into that now, but I just wanted to explain that to you. So let's say we went in and bought one of these contracts. I'll just put in market for now. We could put in our profit taker here. So looking at this particular contract, you can see it's pretty much rolling between, 61 in this case and 64. So maybe we won't be greedy and we'll decide to get out here somewhere in the middle at 62.50, let's say. So we're going to do a profit taker here. We're going to change that to 62.50. Let's say we put in a limit price here, whatever, at 61, okay? So this is telling you here that if we did one contract at this and it did get back to 62.50, we'd make $1,500 in profit, okay? We would always change that to good till cancel, because remember, once we get filled on the first part of the trade, we want this profit taker order to stay in there. Now, let's say you did put in a stop loss order, and let's say we said, what's the recent low down here? It's 55, let's say. Let's call it 56. We put in a stop here at 56. I just want to show you the potential loss in this trade. You can see it's 5 grand here. So that's the risk here with trading these commodities, right? They're highly volatile. They're not for everybody, okay? That's the key thing to point to remember. So, this is for people who are okay with being aggressive in the market. If, for example, you didn't want to put a stop loss in and you felt, look, at some stage, the rationale, a lot of ways people think is that, do you know what, at some stage, the OPEC countries are going to go, well, we're not going to keep producing oil at $60 a barrel. We're going to start shutting production down, And that's the rationale for why the price should stabilize soon. Okay. But you cannot disregard what's gone on here. So if you put this trade on now, right, I'd be suggesting, depending on the size of your account, you're ready to average in down here. So that's the way I'd kind of approach it instead, assuming now there's no drastically bad news about futures. So we're just trying to do a short-term trade here, make a quick €1,500 per $1,500 per contract by trading not even up to the center line. It's pretty much below it here. So you can see it's happened quite a bit. Like if I just went from here, there's 1, 2, there's 3, there's 4 times in the last, since August that's happened, and this could be the 5th time. It could also be the time, by the way, as well. And again, because I just want to make you fully aware of the risks, it could be the time that the support doesn't hold, and next thing we go to the next lower level. But it is a commodity that's now trading at support. That support can always be broken, and then we look for the next support, which is down here at 57 on this initially, let's call it, with some extremes down here as low as 55. So it's really important to understand that, okay? So look, I'm going to go in there just to keep a track of this trade. I'm going to place it just for the benefit of giving everybody an idea of how it all works. So I'll click on, I'm going to change it to market, click on submit. So the first part of the trade will get filled. So we come in here, you can see now we've got this crude oil, one contract here, and we're down $12 or whatever since we bought it. So you can see our cost basis is $61. Now, just to explain what's going on here, you're charged a margin on that. It's not as if you needed $61,000 in your account, okay? So what happens is you're basically long on a futures contract, and you pay an interest rate for whatever the margin is. So if the margin on this, for example, is $5,000, well, then you're going to pay an annual interest rate on this of about 5% on $5,000. So let's say you're only holding this trade for a week. So it'll be 5% divided by 52, multiplied it by your $5,000. That's what it's costing you to hold this trade. That's the cost. It's the borrowing facility as such. So I hope that makes sense to you. So in order to understand, what is my margin in this, if you click into the position, okay, it should tell you here somewhere. Let me go down. There we go. Initial long margin is 15,000. So it's about a quarter of the value of the contract. You can see that my margin requirement on this is $15,000. Okay. So if I was to bring in my calculator here, let's put 15,000 multiplied by 5%. If I was to hold this trade for a full year, it'd be a $750 cost. Let's say I only plan on holding it for a month. So I'll divide that by 12. So it's cost me about $62 to hold this particular trade in terms of interest if I held it for a month, okay? So does that make sense? Does everybody understand that? Yeah. Okay. So unless you have any other questions there, natural gas, guys, is none. You can see it's made a move up, a significant move up. Part of that was because of the contract switch over as well here. So, that's not tradable at the moment, in my view, okay? So a stock we entered yesterday was Alaska Airlines. I spoke about it earlier. This is a good longer-term investment as well. So that's why we kind of went into it. We can kill two birds with the one stone. So, the short-term trading opportunity is really just, you're playing this kind of move back up to the mean, which is your 20-day moving average, okay? So we'll see that play itself out. Longer term looks like a good idea to me. Other stocks, I'm starting to talk about stocks now, is Flutter. You can see this got decimated there recently. This is the Labour government have hinted at bringing out a betting tax. So you've seen this downtrend. It was very interesting, though, that Entain didn't have the same fall. Entain would be their competitor. And you can see Entain didn't have the same kind of level of a hit at all, which I just find quite interesting. So Flutter got a bit of a beating there. So we brought down our valuation multiples to allow for either revenue reduction or operating margin squeeze. And we're still coming out with a decent target price on the stock. So for me, it's presenting a good opportunity to buy a very good brand here. Okay. So that's Flutter. That's something could be for the long term or for the short term, either or. So that's something. Preferably, I'd like to see these lower lows stop. So do you see the way that low is there? So today that's happening. So maybe let today's trading pan itself out. Give it till tomorrow or even Monday and see, do we get a couple of days of stabilization here before you go in, you know? The next one up is Adobe. So this again is something that could be traded both from a fundamental perspective, longer term, and also from a short-term trading perspective. So this is after cropping up now as well. It's after coming back down to the lower end of the Bollinger Band. It's a bit further to go to meet its recent support level, which is 335. So it's at 343. Could fall a bit more. But I think that could be something good for the longer term as well. It's totally unloved at this moment in time. And that's why the valuation is cheap on it. So they were downgraded yesterday. Who was it downgraded them? Let me see. Morgan Stanley downgraded them, but they still have a 450 target price on them. So 450 is way up here, you know. It's down to 350. So look, yeah, stocks are never going to really jump up much into downgrades, but that can change in a heartbeat, okay? Amazon was the other one we spoke about before. So look at this consolidation. That's one you could do short term and longer term. And then looking at that option strategy we discussed, if you wanted a longer term view for people who had sizable accounts. Remember we talked about selling a put on it at 200 and then doing a bull call spread. So that will avoid you, it basically pays for the trade. The only risk you have if Amazon fell another 10% from where it is. In that situation, you'd be obligated to buy the shares. And we talked about maybe turning it into a bull put spread for people who weren't that interested in it, in taking that risk. Icon was another one. Again, I just want to highlight here, that's why I left it on. This is the stuff, again, that we kind of said, we like Icon, all pharma-related stuff was getting destroyed. We had the agreement between Pfizer and Donald Trump the other day, and look, this jumped with that as well, okay? So it could be pharmaceutical stocks have been beaten down so much, guys, that the value could be there. So I certainly wouldn't be selling your Pfizer shares. In fact, if I just jump to Pfizer very quickly, I know a lot of you have it. It jumped again yesterday. Look, it's gone like in 2 days from 24 to 27. And I think there's more in it. I think this is going to go all the way up to 30 and maybe into the mid-30s over time. You're getting paid a 7% dividend for holding it anyway. So I certainly wouldn't be offloading the stock. I would hold on to it. That is good news that came out of it. I mean, the tariff uncertainty has been removed. The one thing you'd have to be aware of is that they have agreed to sell some of their medicine into some of the Medicaid programs cheaper. So what's that going to do to margins? That's the only question mark I have on this as to how that's all going to operate. I've no doubt the company are going to figure it out and keep their margins as high as possible. So that's the reason why I wouldn't sell it. You're getting paid a good dividend, okay? Kingspan, that had that jump recently because it was going to spin out a company. It was going to make it public. That's why there was that big jump, and it's kind of consolidated here. I'd probably wait for €65 in the stock. Veolia was another one. I'd wait. Workday, these are the longer term stuff coming back down. If this gets back down to 220, I think I'll be interested in that one. And then GoDaddy is one that's both a short and a long term one as well. I spoke about that earlier. So these are all trades that I find kind of interesting at this moment in time. Again, preferably with something like GoDaddy, you would want this to stop before you get in, because the last thing you want to do is go, oh, that support didn't hold. Then you're looking down to next support and you're going, oh, actually, it's kind of closer to, 105 down here. This will keep dropping. So we're just looking at technicals here. Fundamentals suggest a higher price, but it's not liked at the moment for somebody has a reason for selling it off. but the positive thing on this one here is I like this. We're at a support level, and I'm kind of liking that back here. And if we get a bit of balance here, I think we could trade that back up, certainly to the center line, moving on to the shorter term stock trades. I've gone through Alaska, Boston Scientific. That there's only one concern with this one here. Where's my? It's this kind of wick down here. That trade down there. That's like a warning. I was there before. I can go there again. I kind of don't like that. Having said that, fundamentals are strong on the company. It has consolidated and it's broken this downtrend here. The lower lows have stopped, except for yesterday was the one. And I'm just trying to figure out, was that just an erroneous trade? And that can happen sometimes. So I just like to see what trading goes on today in that stock. Fiserv is being grinding lower all the time. The one thing I don't like about this one, it has created a new low. So if you look, that was its previous low, it's taken it out. So probably not going to jump on that one, but I highlighted it anyway. FMC, that's something similar here. That low yesterday has taken out this previous low, which raises a question mark. And then this one again is something similar. So again, I'm just showing you up. These are real quality companies. We've gone through all the scans on them. But now we're kind of down to the technicals. And the fact that a new low is being created would concern you. Now, if you're short-term trading, guys, you're not kind of, it's not that you're not concerned about that. It's in the back of your head, but all you're looking to do is trade it back up to here. You're not in it for like weeks and months. You're looking for a real short-term hit on it. And that's kind of why I've shown them that, I'm probably too conservative. As you can see, I missed a load of them. I've taken them off here that all moved last week. And all gone back up. There was about 5 went back up and went up big. And so if you're, at some point in time, all we're doing with this short-term stuff is migrating back to the main. Okay. So that's kind of what I wanted to cover, guys. I think if you have any questions there, just shoot. Throw them out there.
So Stephen, it's Stephen Gavin here. Can you hear me okay?
Yeah, Stephen.
Yeah, I was out of reach yesterday and I missed out on your messages regarding Alaska. Do you reckon still a buy today? Because it's already up, I think, last I checked.
Yeah, Stephen, I like Alaska for the long term as well.
Right.
So I would buy it today and hold it. Even if it went down to 40 here, I wouldn't be bothered. I just buy more of it down there,
I was in and out before, so it's something I like. Fair enough then. Thank you very much.
No problem. Yeah, we bought that before and we sold it out just before 70, I think it was. It was up here and we said, get out. Actually, here's the note. We were saying, I think we were saying to buy back here or something. Actually, can I get that note back up? We bought it back here anyway and we sold it up here. And that's what we said again.
Sweet. Thank you very much.
No problem.
Stephen, how you doing? LKQ, I had a limit order at I think 29.50 or something, 29.75 yesterday, and it went up to 31.13 and didn't get filled. What's your view on that one at the moment? I don't think you covered it today so far, did you?
So you've bought into this already?
No. I had a limit order to buy into it, but it didn't get executed yesterday. And I just wondered if you feel like it's still worth getting in now, or wait, or
no. So if this short-term stuff, Richard, we're going to be strict on the rules here. So you can see it's hit its center line.
Yeah, exactly. Yeah.
So you'd have to wait for this if you wanted to just trade out again to come back down. Wait till it comes back into our scan. So every morning, just to tell you what's going on, right? I've got 2 scans I run automatically. I run through equity scan as well. Here's one, equity scan trend exhaustion. So I'm getting all of the stocks that are in the equity scan universe and I'm looking for trend exhaustion. And the parameters for that are Bollinger Bands. The price is below the lower Bollinger Band, so it's outside the bottom range.
Yeah.
Target price from the analyst is greater than 15% higher, and RSI is below 40. And you can see
Okay.
out of 630 stocks, it's yielding 23. So then I go through each one of those. So Meta's in there, for example, right? Now, I'm looking for stocks that have 20% upside or more. So we got stuck with them. Let's say we bought
Yeah.
into them, got stuck with them. I want to be happy that we'd be happy to hold them. So look, Meta, probably people who love to trade Meta here and go, that's going to go. So, but I discounted it. I also have another one here. And this one I call trend exhaustion, but the stock price is above the 200-day moving average as well. So it's still in a bullish trend.
Yeah. I think that's a good idea. Yeah.
So that kind of just threw up Meta, Netflix, Capital One Financial, Carnival, United Airlines, Symphony Financial, Dollar General, and Dollar Tree. But none of them actually have more than 20% upside on a fundamental level. So I just didn't go with them at all. So just to let you know how I'm going about this, then I'm coming in here as well. I'm using the equity scan tool and screening for stocks over here, RSI, any that are below 30. So I'm going to spit them out, and you can see 26 stocks are coming up there.
Yeah.
Then I'm going for another screen here, and I'm saying, don't bother showing me anything that doesn't have more than 15% upside. And that narrows it down to 7 main. And then I'm going through each one of those as well. You can see Flutter showing up here. And there's a lot of brands here you got to be aware of. So Kenvue here, for example, that's showing up. That's got 31% upside. Both our target prices are quite reasonable here. But they're paracetamol makers or Tylenol. So if, what Donald Trump said the previous week, if lawyers start getting a hold of that, how many lawsuits are coming? Are there class action lawsuits coming? That's why that's down so badly. So you got to know these things. This is what I'm talking about. You got to do a deep dive into each company yourself. If you come up here, I think Puig is up here somewhere. You can sort this as well by potential upside. Puig brands here. So this is a luxury brand maker from Spain. The dollar is hurting them. Tariffs are hurting them. So there's a lot of hurt there. So is that all priced into the stock? These are the stuff you've got to satisfy yourself of as well. There's Alaska Air as a matter of interest. It's popped up there. GoDaddy popped up there. Pernod Ricard, we all know spirits. All beer makers and spirit makers are in the doghouse at the minute because of tariffs.
Yeah.
So that's kind of the rationale. That's how we go by it, and then it's getting stuck into each stock and understanding what's going on with them. So let me take Alaska here as an example. I'm going to get into the financials. So these are just quick screens that I do. I go straight into operating margins here. And I'm looking at, what's going on with the operating margins? And I'm going, actually, the operating margin has gone up. The current one is up over the previous 2 years. So from an operating margin perspective, not too worried. If it come down to debt to equity, question mark here. The debt, you can see the debt has jumped as a proportion of equity in quite a bit. So you'd be kind of going, what's going on here? Could be the purchase of new planes. It could be a lot of different things. Okay, so we have to look into that. Then I'm jumping ahead here very quickly to what's the earnings forecast going forward. So you want to see a trend for future earnings like that. So you can nearly just get a quick visual and say, well, the forecasts are up and the forecasts are up as well. And then, of course, we do our own valuation multiples there too. So that's kind of what we go through in each one.
Yeah.
And all of these here don't have margin issues, right? There might be one or two things you'd be concerned about with debt, as I said, but usually that's explained away. It's not as if Alaska Airlines needed to raise debt to finance their businesses. It's not that. It's different. It can be for specific reasons. It's not like a startup company that has no money, is not making any revenue or profits, and they need to keep issuing shares and debt. It's not in that space. So, and we dismissed, there's other stocks that could be in there, but let's say for argument's sake, when we got into financials here and we start looking, there might be in the second year earnings are forecast to be down and so are sales. We don't want any part of that. The market isn't going to like that at all.
Yeah, yeah. I just one thing I've read anecdotally is that COVID cases appear to be increasing. Nothing, of course, like the rate of growth, from 22, whatever. But I wonder if that something like that factors in your choice of like airline, because if there's any lockdowns again in the future, then the airlines are hammered immediately. I
Yeah,
just wonder if you factor that.
no, I haven't, Richard, to be honest. And it is a possibility. So unfortunately, I actually know somebody who's passed away from COVID in the last couple of days. So in Ireland, so you're not wrong. There's definitely a rise in COVID cases, and from that experience, hospitalizations as well. So it's not something I factored in at all with Alaska, but it is a good point you've made. It is a possibility. It is
I'm
a
sorry, I didn't mean had something you had factored in your choice of Alaska Airlines. It was just in general, is it something that an external factor that one or in general should think about when looking into a particular sector? So
look, you can factor in lots of risk. We could factor in, for example, what if Russia invade Europe?
yeah, sure.
It's just where do you stop factoring in risk? And at the end of COVID, if we think about it, we got to a stage where we were flying, we were just flying with masks. It became mandatory, and I think it'll be something like that. It might mean demand goes down. People will take less risk in actually flying. So you're probably right there. And
Yes.
we are in that season, aren't we? Where it's
Yeah.
do our COVID season, yeah.
Sure. Yeah, thanks, David. That was all I had.
Good points, Richard. Yeah, fair play. Any other questions there, folks?
I did have one more if no one else has one.
Yeah.
Just I didn't get a chance to jump into the equity scan, but like I'm holding Pfizer like many others, and it's obviously jumped quite a bit. What would you see as the upside in that, or are you like take profit off the table, or I think you said earlier it's a long-term hold. Would you still be
yeah, like we have a target price now. It's well above analysts at 31.50. I think that's going to go up to 35 or 36 because look at our valuation multiples here.
Yeah,
really dropped them. And if we go into Pfizer here, just go into the statistics here. So you're going to see a big change here in margins and all. You would have expected it because if you think about it, 2020 margins jumped. They were selling the vaccines. Do you know what I mean?
Sure.
So things are going to change there. But if we look at kind of just small little stuff here, if we look at valuation multiples over the years, kind of we're using 11, and you can see 14. Okay, there was one at 9, but that was post-COVID when the vaccines were gone, and this was all of a sudden Pfizer was trading at crazy. Sorry, Pfizer's earnings per share then because of the vaccine was huge, significantly bigger. So that's an anomaly there. But you're talking about normally, let's say 14 to 15 times earnings. We're looking at price to sales here as well. And you're looking at, we're using quite low multiples in our models. Okay, 2.8, you might argue, could be on a little bit on the high side, but it's not so long over 2.9 and 4, 4 and 5. And the reason this is so dour, in my opinion, all this risk with tariffs, which is now dissipated. And secondly, kind of what's next for Pfizer after the vaccine. And I think those multiples are going to go up is what I'm trying to get at. I think you're going to see the PE multiples trade north of 15 and this get closer to 3, which will bring the value up in itself. And then I think you're going to get analyst upgrades into earnings too.
Okay. Yeah, that's really good. Thanks, Stephen.
No problem, Richard. Any other questions, folks? No. Okay. So just in summary, just want to talk through. So no trades on SPY. We're just monitoring our short put that's left over. Alaska Airlines, which we bought, we'll just continue to monitor that. Considering a trade in a couple of longer term stuff like Flutter, Adobe, Amazon from our option perspective. We might put that on soon, actually. I'm going to get rid of kind of Icon there. It's no longer in the fray, and these two are no longer in the fray for now. We also spoke about crude oil and a potential trade there. Now, that one's not for the faint-hearted. That's for people who are okay with taking risk. If you're not comfortable with seeing something go down a couple of $100 in a matter of minutes, don't do that trade. It's not for you. That's for people who are comfortable with risk and trading the futures market. So I just thought I'd bring it to your attention because it is, I know a lot of customers do have an interest in that. And it is down at the support area. It's down at the lower Bollinger Band. And people looking to make a quick thousand here, there's a possibility in that. Okay. So that's that. And then on the shorter term trades, we're in Alaska. We're talking about Boston is probably the one here, with the exception of that. That's the only thing that bothers me. We spoke about Flutter, and we're kind of interested in GoDaddy too. They're the ones, and I'll let you know we go ahead and trade them. Okay. Okay, folks, that's it for this week. If you have any problems or issues or need any support, just send me an email or a text, and I'll get back to you as soon as I can.